All right. I'll do a rundown on UTK. So, uh, it's going to be really quick, guys. Yeah, I'm in the middle of doing something, but I just popped on quickly. What was I going to say? So, this was the initial area. If you remember, obviously, I made a note of this a while back, down in the 30s, and then we had all of this crazy stuff, blah, blah, blah. And then we since came down and we tapped into this, okay? So, if I get rid of this, and I'll just show you this way, bit easier to explain. So basically this is that, as you see, and I'll just change the colour because it's a bit dry. Black's a horrible colour and only needed when we're using line in the sand. So we've dipped in, and obviously we stabilised just above this level now. Okay, we had a nice pop yesterday, which has been following through today. Okay, so this bodes well. The problem with UTK is this shit and this shit. Okay, now although this is inherent price action, it doesn't make sense. It's not something that I would consider viable in terms of analysis. So when I'm looking at this, I don't really care about these big wicks. They're nothing more than just you know um, massive orders hitting the market, price spikes, and as it's reaching. So just say for argument's sake, and the easiest way I can explain it is like this: as price starts to run, let's say a big order hits the market, and then price starts to run to execute that order. Okay, and it's reaching for liquidity to pair that order. Yeah. And it finds some maybe at 55, finds some at 60, 65, 67, 68, 70, whatever, and eventually it dries up. Yeah, and then it just comes all the way back down because there's no momentum there's no follow through. It's not a momentum shift where people are slowly putting their money into the market. Then it starts to ramp up, and UTK has got a nice influx of orders coming into the marketplace. Buys. It's just one huge order, and like I said yesterday when I was talking to Ro, it's probably company executed. Stuff like this is probably company executed. Same here as well. It's not manipulation. There's a big difference. Yeah, sometimes people say, well, you shouldn't be doing stuff like that. But it's not about that. Obviously, the mechanics of the way a company, especially in the cryptocurrency space, will move their tokens around or execute orders, maybe OTC orders and stuff like that. This is what all of this is about. So it's irrelevant to analysis. Yeah. So when we're looking at this drop, what we need to pay attention to is how price is picking up liquidity. Yeah, and where does it need to offload that liquidity? Right. And we ignore this. Yeah, and we ignore this because we're not going to look into this. We're not going to look into this and figure out where the imbalances are and where price might need to go. You kind of just look at the bodies, just above the bodies, and kind of work backwards from there. So we dipped into it pretty aggressively, obviously, and then a second dip takes the low out, and then we come deeper into the liquidity pool. There is a little bit left. I suppose if we're going to kind of measure it out, it's probably about here, slightly. Yeah, that's effectively what's left. Yeah, all the way down to about 25, 26. All right, which would be just below here, and there's a small imbalance just here as well. So if this gets reversed, this is where price is going, period. It's not even a maybe, it's 100%. If this two candle lift gets reversed and price gets below this, we're going straight for this. Okay, it doesn't necessarily mean it's going to do it fast, but that's what will happen, right? So we need to see some follow through on this. In terms of right now, if you look at the 4 hour, you can see, and I don't like this about the 4 hour in terms of what happened. If we take the point where price popped just here, these candles right here are responsible for this pop, right? And then it comes all the way back down to eventually hit the point where price popped in the first place, and then it comes down and clears that out completely. So that drop right there, taking out this low, has cleared out the liquidity here, so it's no longer relevant. So my point is, if price gets reversed now and it takes or clears out this, starts here, gets below these two lows where the liquidity started to build up a little bit, then it won't even stop here. It'll just go straight for this one because there's nothing there to pick up. There's nothing there to drive for. There's no opposing liquidity pool. The next one's down here, yeah, which is obviously on the daily. It's a daily liquidity pool. So in terms of going forward now, it would have been better if price came down maybe to here. dipped into this wick, took out this low, and then did this. Okay, because as it stands right now, like I said, there is a liquidity build-up. A little side note, a lot of people look at price candlesticks when they're charting, and you can see it on a line chart or a bar chart, and they see stuff like this and they say it's a higher low. Okay, so it denotes, the next, say for example, we've got a high low here and then a higher low here, and then high low, and then it's supposedly a start of a trend and everything else. This isn't always a good thing. Yeah, higher lows and lower highs, depending on which way you're looking at the market for what reason. You need to see higher lows, for example, in an uptrend on a daily, a weekly, where you know that the momentum is really pushing, on a much larger time frame, and that trend's probably going to last a lot longer, so you can play around with it on the lower time frames. Whereas as it stands right now, this is a 4-hour higher low, but effectively it's within, a consolidation. Really, it's not really doing much per se. Sort of here, and we popped in the consolidation, popped out of the consolidation, and came straight back in. Yeah, so this is the consolidation, and that candle is within the consolidation. Pause slightly, and then we get that second pop just here. This needs to continue now. If we drop down to the hourly and just see how that's broken up, and it's not too bad. That's actually not too bad. That candle right there, the big sharp one, that's not good for us in terms of seeing upside momentum on Utris, because now what we want to see is price stabilize here, stabilize. The lowest it can go is say 44, 45, but we wouldn't really want to see price much past that point, but when you get big sharp candles like this, it leaves massive gaps behind, and price eventually needs to kind of come back down and sort it out. So we need to see price stabilize up here before it reverses. Before it continues. If it starts to bleed in, and it gets through this and it starts to bleed in more, there's an imbalance here. You've got some more liquidity here, and then we're straight back into the consolidation again, which we know, as I previously said, there's no liquidity there. There is very small pockets within this 4-hour time frame, but in the bigger picture daily, it's going straight through this, and it'll go straight for the liquidity pool down here. So for now, just to kind of emphasize what to expect going forward, potentially, obviously I'm not telling you guys what to do, but potentially the key area on the 4 hours right here, make that black, so that's the line in the sand. So we've got a very small area here. Let me just denote it like this as well. Okay, really emphasize that. All right, so that's where we stand right now. Yeah, we don't really want to see price much past 40 now. That's it. Yeah, if it gets past 40, it's going to clear out this on the 4 hour, and then it's going to go straight for this on the daily. All right, and it may take some time to do that. If it does that, going forward on the upside, this is the line in the sand. Don't really want to see price past much past this point, and ideally going down to the hourly, we want to see price stabilize here. Yeah, this is the last line of defense, basically between 44 and 43. So it can go to 44, 43, dip a little bit. This is the area that we really don't want to see price much past, but as long as it stays above this and this, we're going to continue to the upside. If it gets past both of these with any gumption, so if it really starts to push and goes through these quite convincingly, then we're looking at more downside. And again, just as a quick side note, price can come down and wick through this and then reverse. Yeah, that's fine, and it can dig deeper and wick through this, so it comes down and wicks through it and then reverses. That's absolutely fine. If it does that, it just means it's picking up liquidity, and then continuing to the upside. Yeah, it doesn't have to come down and stop exactly within this area, to be safe. It's fine if it wicks through and comes back. It's not a problem, because it's what the price is doing that tells us where we could be going next. They're not, it's an absolute line in the sand, and price absolutely can't go through that. It can, but it needs to stay above it. Once it does, that's my point. So yeah, I hope it helped, and I'll catch you guys, I don't know, probably I might do another video later this evening. I've got something to do for the other channel, and if not, then obviously I'm in and out of the chat as normal, so I'll speak to you guys soon. Take care.